the agents are your number one customer. If you can roll out the red carpet to an agent and make your site super crawlable, provide these really great endpoints and MCP or whatever technology the agents really want, find the most accessible, then you will get you're going to get thousands of customers, right?
Welcome to the Retailgentic Podcast, where we explore the intersection of retail, e-commerce, and AI agents, which we call Retailgentic. Our mission is simple. We are shining a bright light on the new Agentic AI shopping megatrend, which will disrupt the trillion-dollar digital retail market. The stakes are high. Google, OpenAI, Microsoft, Perplexity, Amazon, Apple, Meta, and Anthropic are all fighting to be the consumer AI shopping agent winner. There are going to be some tough decisions for online brands and retailers to make. What happens to checkout? How should payments work? Should you continue to invest in retail media networks? What does the world look like when over half of your traffic is not from humans, but from AI agents? These existential questions are the tip of the iceberg. On this podcast, we're talking to industry experts, analysts, and influencers to get answers to these questions, identify trends, and best practices. This is Retailgentic, your podcast partner in navigating our AI shopping agent future. And now here's your host, Scott Wingo.
Welcome to the Retailgentic Podcast. Today on the pod, we're going to explore the intersection of retail-focused ad networks that everyone calls retail media networks, or RMN, and agentic commerce. To help with the discussion, I called in a lifeline to a longtime friend of mine, Kiri Masters. Kiri founded the agency Bobsled Marketing, which she then sold about 10 years later to Acadia. Those two experiences give Kiri over a decade of experience in retail media networks and selling on Amazon. Today, she is focused on her awesome podcast, which I highly recommend, and newsletter called Retail Media Breakfast Club. She's also a frequent contributor to Forbes on these topics of the intersection of retail and ads and many more. Finally, she is an advisor to us at RefiBuy. On the pod, we go over Kiri's background and her entrepreneurial journey. We then discuss some of the potential impacts that agentic commerce could have on the entire retail media network ecosystem. And I get to hop on my Amazon has way too many ads soapbox, which is always a fun place to be. Thanks, Kiri, for coming on and helping lead this discussion as we explore some of the impact agentic commerce will have on retail media networks. I hope you learn as much about retail media networks as I did. I am here live with Kiri Masters. Kiri, welcome to the Retailgentic Podcast, and welcome back to the United States of America.
Thank you so much. It's great to be here.
Yeah, so you and I have known each other for a very long time, but listeners and viewers may not know you. So let's start back at the beginning. Where are you from? And give us a little bit of background. How did your background lead you into this exciting world of e-commerce and retail media?
Yeah, so I'll rewind just to 2015, which was the first year of Prime Day, when Amazon really started to kind of, I think there was a bit of an inflection point of a year, really. I had no background in retail or e-commerce or agency world, and I decided to start an Amazon marketing agency in 2015. And the reason for that was I was working a corporate job. I was working in banking. I was in New York working for Chase Bank. And I had this e-commerce business on the side that was like my nights and weekend kind of hobby business, selling craft supplies, and eventually started selling those products on Amazon. And then I'd speak with my clients at the bank, and I was like, I know more about Amazon than these guys. Maybe I could go and just be a consultant. So that's what I did in 2015. And like I said, I was kind of unwittingly at the beginning of a pretty big wave with e-commerce and eventually retail media at that time. And the agency I started was called Bobsled Marketing, and propelled by that and doing a lot of free content along the way, because I didn't have any Rolodex and I didn't have any money, but I did have time to blog and write videos and start podcasts and stuff like that. So we became a pretty well-known agency in the space. And in 2022, Bobsled was acquired by another agency out here in Atlanta called Acadia. So I was there for a couple of years, and then I left last year and started a publication called Retail Media Breakfast Club, which is a almost daily podcast and newsletter talking about trends in the retail media space.
Let's go back to bobsled. Why bobsled? Was it an Olympic year, or are you an avid bobsledder, or what? Tell me about the origin of the name.
Yeah, I don't know if you have like a really smart way of thinking about naming your company, Scott, but I don't.
That's fine. I always like to hear this. There's always a story inside these things.
It was kind of like when needed a name, needed to like register my LLC. I'm like, I'm going to come up with a name. And my husband and I, we got from this very eccentric friend a wedding gift that was it was a toboggan, and I turned it into a light fixture and I put it on the wall of our Brooklyn apartment. I was like, what name am I going to come up with for this agency? Bobsled. It's like, it's a performance sport. It's like a team sport. It's about speed and execution. I was like, I'll come up with a tagline later, but I'll just call it Bobsled for now. I never really came up with a really good tagline, but that's why it was called Bobsled.
Oh, inspired by a toboggan.
Yeah.
And then explain, so as an agency, what was the profile that has like a wide spectrum of things when you have that word? What was the profile of your customer? Were they all selling on Amazon? Were they brands? Were they retailers? Were they like kind of small entrepreneurial third-party sellers? What did that look like?
Yeah. So initially it was, whoever would pay me, and in many cases didn't end up paying me. So it was small startups and small companies. Over time, it got larger, mid market, and towards the end, a smattering of enterprise brands and things like that. But at the time, back in 2015, there was really it's a very dense space now in terms of competition. There are so many agencies that cover the space and have different value props for different types of audiences. But back then it was, the holding company agencies just didn't take it seriously. I remember in the early days listening to some interview with, I don't remember which holding company CEO it was, but they were being asked about Amazon. The CEO just completely blew it off, like, oh, we don't see any opportunity there. That's kind of ridiculous. It's all going to blow over. But that was really the approach. And I do remember, like in 2015, still having these conversations with brands who just had no idea that their shoppers were buying their category on Amazon. We'd speak with a luxury skincare brand and they'd say, well, our shopper doesn't shop on Amazon, like putting luxury skincare in the same shopping cart as toilet paper. I mean, come on. So there was still a lot of resistance back then from certain brands and even a lot of the established agencies sort of recognize that consumer behaviors were changing, which it's why you and I are talking today. Like, I think that we're at a similar inflection point in that consumer behavior is about to change really, really quickly. And we'll look back at 2025 and say, well, that's sort of really where it all started.
As a fellow founder, I always love to ask these types of questions. Like, so you grew from, 7 years is a really good run. First of all, congrats on that. Every year you survive as a business, there's only like maybe 10% of companies make it that year. So once you get to 7 years, you're into that like 0.001 kind of range. So what was it like selling after 7 years? Some people, when they sell their first company, it's kind of like giving up a child, and other people are very like, all right, I was kind of burned out and I am now. It's like the happiest day. Like, how did it land for you?
It was all of the above. It was great. I sold to a really great company, and they were. That doesn't happen all the time. so they were awesome and did everything that they promised, which is great. And my whole like management team, they're all still there. They're all still at Acadia, like 3 years later, which is awesome. But it was also kind of devastating in a way as well. I was burnt out. I was ready to sell. But I think a lot of people who sell their companies, it's a huge percentage that have kind of a bit of a breakdown afterwards, and they suffer some, maybe for the first time in their lives, like a real change in identity, because it's not all about you anymore. You're not carrying the load of the company anymore, for better or worse. And that changes your whole perspective and reason for being. So it certainly came with challenges that I wasn't expecting.
But you've made it through.
I made it through.
So that brings us to, what are you up to now? So you're obviously a thought leader, and you have the Retail Media Breakfast Club, and you write, do a lot of writing and stuff, which is awesome. And is there any desire to take another run at doing something? Or are you doing a little bit of consulting on the side? Like, what else is going on in the world of Kiri?
Yeah, it may evolve over time, but for now, I'm very curiously following the space and doing this publication. And the way I'm monetizing that is through sponsorships and speaking at events and things like that. I saw a gap in the space for commentary. There's a lot of news out there, and there's some fantastic journalists that cover the space from a news perspective. But when you're a real journalist, you can't share your opinions. It's not about you.
Yeah, journalists are an inch deep and a mile wide. They'll cover this, that, and then they have to cover some other fintech thing or something. Yeah.
Yeah, well, there are some journalists out there at publications who really do focus on the space, and they're brilliant. But I think what I wanted to do is a bit more commentary, and like maybe say some of the things that people think but don't say out loud. And in this space, there's different stakeholders that have quite different perspectives, and they don't always understand those other perspectives. So the retailers are the one, in the retail media space, they're the ones standing up these retail media networks. They've had these management consultants come in to the retailer and say, retail media profit margins are 80%, and you should be able to build an 8-figure media business in the next 12 months. And they get so excited, they go stand up these media networks. Doesn't grow as quickly or is as profitable as they were promised by the consultants. And then they're trying to cut costs and grow the network, and maybe cut some corners in terms of their actual ad product. So the brands actually spending money on these networks are a bit disappointed because they don't get the data back. They're not getting they're not getting from retailer XYZ what they get from Amazon, but they're kind of being forced into spending this money. So they're not happy about that. And then there's the tech ecosystem and the agency ecosystem as well. And the relationship dynamics between those four stakeholders in the game is quite interesting. And there's a lot of tension and unspoken unspoken issues bubbling.
Love, hate, love kind of thing going around the circle.
Yeah, exactly. So it's a very rich and interesting space to cover.
And then, so your gateway into Retail Media Network, I've always assumed, but just to verify, is you were helping people do more like traditional selling on Amazon, 3P. Maybe then you kind of like got into a little bit of 1P because you kind of like have to help people navigate that. You pick up a little FBA, and then Amazon's added more and more ad capabilities, and then other retailers have replicated that. That's kind of the form of retail media. Is that kind of how you got into it?
Yeah, absolutely. Yeah. So back in 2015, Amazon, at least, unless if you were a huge brand, you had a direct, advertising way into Amazon, I guess. But the biddable media on Amazon was like auto campaigns or manual campaigns phrase match or exact match, and that was kind of it. So over time they've done an incredible job of building a really amazing media network over time. So the capabilities have expanded on their side really rapidly over that period, and we have that they built a DSP and they built a data cloud and things like that over time. So their capabilities grew, and then we had other retailers coming into the mix with Walmart. Best Buy has had a retail media network for a very long time. eBay was a huge early mover there as well. But then Instacart and a lot of other retailers came into the frame more recently. So that's when the retail media moniker came along. But now there's like this huge push in the industry to expand it beyond retail media to commerce media. So I might have to change the name of the podcast. We'll see.
Is that because they want to? I keep hearing people want to do in stores. They want to have screens like in your face on the cart, like everyone wants Minority Report, where like constant ads beaming at you every second. Is that kind of the vision of
what's the problem with that, Scott?
Well, as a consumer, I'm not a huge fan. This is where we'll talk about that. But yeah, I'm not sure that's the retail future I'm 100% signing up for.
In-store is a category of retail media, but this is actually, when we're talking about commerce media, it's the non-retail players that have consumer data that want to like resell that data in some cases. In some cases, they have screens as well. So United Airlines, Chase Bank, PayPal, DoorDash, Marriott, they're all rolling out their media networks. And the thing is, those publishers have had media networks for a long time. Western Union's had a network for a long time. Expedia had a publishing network for a long time. They just didn't call it retail media back then. They just had a nice little ad business on the side, but now they want to be part of the movement.
Yeah, and this is timely, Jason. I just recorded our Amazon recap for earnings, which came out yesterday, and incidentally, Wall Street did not like them because of AWS. But the big surprise was the ad platform accelerated even more, and now it's growing about 23% year over year. It's by far the fastest growing part of Amazon. With now AWS is growing at like 17.5%. So. And it did 15.7 billion in the quarter, so that gives it well north of a 65 billion run rate right now. And then in fourth quarter, I think in third quarter, it's going to take a huge step up because of Prime Day. I heard that they were really pushing ads very, very aggressively on Prime Day, almost to the point of it's become a gate where you can't participate in the Prime Day activities without buying a pretty big commitment on ads. How do you feel about the whole where Amazon is with all that?
None of it strikes me as anything particularly new with ads being considered a toll to sell on Amazon or to participate. It's pay to play at the end of the day, and there's some charts out there from people. I've made a few of them over the years as well, just showing on an Amazon search results page just how much real estate is taken up by ads. And it is, in many cases, more than half of the page is ads. So there is a gate, and this is how a lot of retailers are trying to think about their media networks as well, is there's a tipping point where more ads, or let's say less relevant ads, actually reduce GMV. And different tech vendors in the space have looked at, that tipping point. And for a retailer, at the very core of their business is this merchant organization that's responsible for growing GMV. And there's tension within a retailer to drive that GMV, but then also like build this much more profitable ads business, even though it's much smaller. So Amazon, they don't seem to worry so much about that tension as traditional retailers do, because it's like it was built into their system right from the beginning. And And it is very interesting to see. I mean, they're one of the only retailers that's large enough to be required to split out their ads business. So
Do you think they see data that it's hurting? I feel it's hurting the customer experience. Like I can just feel it as a consumer. Like it's gotten to the point where there's certain, especially as I get into CPG stuff, it has made it a game for me to find what I want. Like it's making it almost impossible. Like there's so much ad load, especially for some reason, dog treats is like just bonkers. The It has to be impacting some element of their performance, but I think they
yeah.
don't care, or they look at the margin, right? So you can lose a fair amount of GMV and for an ad because the ad is pure margin, and the margin from the GMV you're losing is much smaller, dollar for dollar. So I think they're making an economic decision on margin, but I think it'll erode LTV of the customer base is what I worry about.
I don't disagree. I don't love the experience myself, but people have been saying that exact same thing for the last 3 to 4 years.
And then it's like they're like it grew again, yeah. And they're like, let's triple ad load, yeah.
and they keep growing and people keep shopping there. So I think that there is there's a big, a lot of people would say, oh, there's too many ads on Amazon, but what are you going to do next time you need to add something? I don't know, like the behavior is just so strong. Not to say that they can't be disrupted, and including by more by new technologies like we're going to talk about today that have a better experience. So yeah, Amazon, they need to keep disrupting themselves. That's for sure.
Yeah, that's a good setup for. We'll just jump into it. So you and I have kind of gone back and forth on LinkedIn and haven't had a chance to talk. So this is like our first exposure. And I don't know if you saw Roy Rubin on, but that got a fair amount of attention on the podcast. He basically kind of said there'll be a $1 billion brand without a website. And he kind of views that eventually, if you're spending all this time up at this Gen AI agentic layer, and it's so convenient, why are you're going to start to atrophy and go to websites less? Then if you take it to the logical conclusion, it's kind of like, well, then you can build a brand without ever having to have like a traditional website. And there's a lot of those today. You and I know TikTok Shop is kind of like, there's a lot of brands that just exist on TikTok Shop. And I'm sure they do have a website, but if we were to look at a pie chart of their sales, it's like 99.9% TikTok and other mechanisms like that, and like 0.001 direct from a website. But it is an interesting thought experiment. And then so that's a good thought experiment. And then if that happens due to this change in consumer behavior, what happens to retail media networks?
Yeah, well, just to build on that point, there was a lot. It's less so now, but there were a lot of businesses that exclusively sold through Amazon FBA.
Yeah, I've met a lot of the channel advisor customers. You would go visit them, and it was like someone sitting in their house, and they would, all the inventory. It's inventory arbitrage. So they would find something, usually hair extensions or drones, off of like an Alibaba, put it into a fulfillment center, and sell it on Amazon, and never touch it.
I remember the glory days well.
Yeah, you probably had some as clients.
Yes.
They all get really big and then they would just disappear one day.
Right, exactly. So I don't know what that says about the next wave of website-less businesses.
So what do you think Gen AI does to retail media networks? There's an argument to be made that retail media networks are a bit of a trap that retailers have put themselves into because they've gotten addicted to this high margin ad business.
Yeah.
And spending more mental energy on that than selling stuff. And we're about to enter a world where selling stuff is going to be really important. And there's going to be a whole new mechanism, which is agentic shopping. And they're not ready for it.
Looking forward to jumping into this argument because I want to hear what you have to say. But yes, I think that there really is an existential risk that AI, or at least agentic shopping, poses to retail media. So I'll break down some core pieces of my argument. I want to hear what you think. So one, the fundamentals of economics in retail media are how retailers make money. There's a few different buckets of advertising. One is the surface itself, the on-site ad surface that a retailer can sell. So this would be your website, your app, that's an ad service that brands want to be on, because if we're spending time on a bestbuy.com or on an Amazon app, then the brands want to be there where people are making decisions and considering their options. And so the estimates vary on this, but let's say that's a 70 to 80% profit margin for running these on-site ads for retailers. So that's pretty attractive.
What's in the cost part of that? Like, why isn't it 100% margin? Like, what's the cost? Just the cost to serve an ad?
Yeah, so you have different technology partners that play a role in that. So you've got an ad server, you've got a supply side platform, and then you actually have to have a front door to that ad inventory as well, which would be a DSP, and everyone takes a cut of that along the way.
Got it. Okay.
And then also like some of these retailers and publishers, they'll have like a direct sales team as well that might handle the VIP sales orders coming in. The other big piece of retail media is offsite retail media. And what happens here is a retailer will sell is the wrong word. They would never say sell, but they're essentially selling the transaction and audience data to third-party publishers. So Disney, for example, Disney's partnering with all of these retailers so that an advertiser who wants, let's say you're a craft, you're Heinz and you want to be selling more ketchup, then you're advertising on Disney and using Albertsons audience data to see like which families live in the suburbs that are getting ready for a barbecue. So that margin is lower. Let's say that's 40%. Again, it's going to vary a little bit, but making money off of that audience data. And then finally, we talked a little bit about in-store physical digital signage and things like that. What the physical environment, this is more of the old school type of trade marketing. So the end caps and the signs on the carts and things like that, that's trade marketing. And that's where all the retailers are trying to like move the budgets over from trade marketing into retail media. But that's super profitable. That's pretty much 100% margin because there's not really, there's less technology involved with that. And it's really just like some humans on the retailer side managing that. So then we get to this question of what happens as consumer behavior starts to shift from using a retailer website or app to just now using ChatGPT or Perplexity or whoever to research, find, and buy. You're not going to that retailer.com or the app. You're not, I'm not sure who's going to have the transaction data on that, if the retailer is going to capture that or if it's going to be on the agent side. That was one thing I wanted to ask you about.
Yeah, so there's no FBA. It gets complicated if you have a third party shipping piece in there. But like, let's say there's no FBA option in there, and the way it has to work is kind of like the way eBay works, where you receive an order that's been paid for, and in that order you're going to get the bill to information and the ship to, but you're not going to get the pay information. So I'm going to know I'm sending a bottle of Heinz ketchup to Kiri Masters in Atlanta, and I'm going to know her address, and I may know her phone number, but that's it.
Right.
Yeah. So I think it will most likely work that way. There have been marketplaces proposed. This is one of the things Jet.com did to be very differentiated, is they basically said, we're a merchant aligned marketplace. So our customer is your customer. We're sharing all that information with you. So they would send downstream. They still processed it. It still showed up as merchant of record. It was Jet, but then they would share downstream a lot of the information. Mm-hmm. And what they were trying to do is get the merchant aligned with, it kind of had like a Shopify vibe, like we're arming the rebels kind of thing. We're arming you to sell to these customers, and the more we tell you, the better. And then they were trying to incent the merchants to offer lower prices. They would even share kind of like how the merchant was doing in the auction, basically, kind of like the buy box like auction. And then they would also incent the merchant to take ACH payment and encourage customers to do that, so that then the payment processing fees were lower and all these kinds of things. Yeah. So it was interesting. So we don't know until they launch this thing. I imagine it'll look more like The fast way to build this is using Stripe actually as a platform for this. It's a marketplace platform, and it's going to probably be built on that. And then they'll have Shopify sitting next to it if you're a Shopify merchant. So I imagine it's going to look like what I said. You're going to get a paid for order, and it will have all the shipping information, and it'll be a fulfillable order that's been paid for.
So that is going to put this whole offsite retail media business at risk for retailers because they don't have the transaction data and the signal data as well as what's really important too. So maybe
they would have the transaction data, so they would know that Kiri bought the Heinz ketchup for $8 or 2-pack or whatever. So they would know that.
Yeah. Oh, okay. All right.
They don't have traffic on their site, so the consumer, they don't know the consumer journey. They just get like an order that came back.
I think even in that scenario when the retailer has the transaction data, the agent's going to have the transaction data as well, right? Because they actually went and did the transaction. So now you've got two parties that know that Kiri went and bought the ketchup, and that degrades the scarcity of that data from the retailer, because this is a huge thing it's a huge advantage for retailers is that they cover different value props. We cover all of Texas, or we're the number one electronics retailer, and so that first party data that they can allow advertisers to activate offsite. Now ChatGPT can sell that data to advertisers as well, so it degrades the value of that.
Yeah, Sam Altman has said pretty publicly he doesn't want to do ads.
Mark Zuckerberg said the same thing, and Sam Altman just went and hired Fidji Simo from Instacart, who built a very successful ads business over there to lead applications. So I'm sorry, I don't buy it for a second. There won't be ads in ChatGPT.
Yeah, I think you're probably right. Yeah, I think they have a lot of. They're losing $5 billion a year, and they'll have a lot of flexibility of making revenue to cover that. Sure.
This is it's such a no-brainer for them to do it. So then what's left from those three buckets of income that I mentioned to you before? You've still got the physical environment. You can still do end caps. You can still do, this is not my world, so I don't know all the terms, but all this trade budget that's currently at risk from the hot new thing, which is retail media. Ironically, I think that's actually very safe because people still will go to stores, and some people, if they disagree with me, they're like, oh, but you think you're going to allow an agent to buy everything for you? And it's like, well, no, it will still be one of several modalities that we use to go buy things. There'll still be stores. So that's sort of how I see things shifting. And then what retailers do with that and what brands do with that evolution is, something else that we can talk about. I have some ideas, but I'll just stop there and see if you have any holes to poke in my outlook there.
No, I think it's right. Let's say, and it's easy. It's a good thought experiment to kind of paint these things as black and white. It's kind of like you feel the edge cases, and you can kind of see what's going on. But you've been at this for 10 years. I've been at it probably like 30. And, I'm always surprised e-commerce is only like, depending on which number you look at, 16 to 20% of overall sales. So I do think, to your point, I think this is just going to be another modality of how people are shopping. And I think it probably gets to, I saw PayPal CEO said 25% of e-commerce will be agentic by 2030. That feels right, but it's 25% of 20%, which is 4% of commerce. So, so it'll probably be a percentage, and that itself isn't material for commerce, but 25% is right material being defined of anything over 10%. But what happens if 25% of the traffic goes away? Like, you know this world better than I do. Certainly, so Amazon would feel it, right? Because that's a $60 million line item for them. That's, I think, pure margin. So that would go down by 25% just naturally. But then, like, who else do you think that's cataclysmic for your world? Or people would be like, oh, it just makes inventory more valuable and people will pay more for it. Like, is there a counterbalance to that?
Yeah, it's a really great point about it being a percentage of a percentage. And ironically, I think you're right that the retailers that have the biggest exposure to commerce, the e-commerce, will have the biggest hit. I mean, there's not so many. I mean, I shop online a lot, regardless of the category, but for a grocery retailer like a Albertsons or an HEB or someone like that, people aren't doing that. They're not so much going to the website and checking out or using the app unless they're a chronically online shopper. So really, the on-site environment for them is probably less of a revenue stream than the offsite in terms of volume that they're bringing in with their network. So yeah, I think you're right. The ones that are more exposed to e-commerce probably stand to lose the most.
I think, and this just occurred to me, but I think another big loser in this could be Instacart, because that's where having an agent is super helpful, because it's such a drag to press all the buttons to get like the avocado added to your cart at Instacart. So I wonder, and then if it's like an agent kind of pressing those buttons, then the ad efficacy could go way down, because that's a huge part of Instacart's revenue, right? Is ads. It's like, last I looked, it was almost all the margin and a pretty material part of revenue. So that's interesting. And a lot of people have been leaving Instacart. I don't know if you followed this or not, but so you mentioned Fiji left. The chief product officer just went to Walmart. Perplexity hired previous chief product officer. And I think there's like 3 or 4 people underneath those folks that have left. So I wonder if there's a little bit of writing on the wall at Instacart that maybe this agentic thing is somewhat risky for them.
Interesting. Yeah, and I think that there is still a lot for retailers to do here as well. I actually think that there's a very significant opportunity for loyalty programs. If you think about what kind of preferences am I going to feed to my AI a sidekick, it's dietary preferences, budget preferences, but it's also if a retailer has a really strong loyalty program, that's potentially going to factor into my criteria as well. So I might say in like a grocery shopping, build a basket scenario, build a basket. I'm making these 5 meals this week. Build a basket and like tell me which retailer is going to be cheaper for all these things that I need on my list. I might come back with, retailer A is cheaper than retailer B, but I just remembered, like, I have my loyalty tier with retailer B, and even though they're a little bit more expensive, let's go with them because I really want to get this perk that they offer when I get to the next tier, or they always give me samples in my order, or whatever it is for retailers.
Gas point for me, it's gas points.
There you go.
Yeah, gotta get our Harris Teeter gas discount.
Harris Teeter, you listening? They're part of the Kroger group.
Yeah.
Yeah. So that is, I think that's a really big opportunity that could come back. And then other differentiators, and these are not new concepts, but you can differentiate on fulfillment speed. You can differentiate on ease of returns. You can differentiate like a Sprouts farmers market or something like that on unique selection and having like, more homegrown brands or whatever it is. So there's still many things that retailers can do. And then we get into this topic of like gating the agents. And this is where I find it super interesting, this philosophical divide between Walmart, who is, by comparison to Amazon, like flinging the doors open and saying, welcome, we welcome our robot overlords. Like at some point in the future, they actually want Sparky to integrate with external agents, whereas Amazon's building their like closed ecosystem, like Alexa, you need to use Alexa Plus for everything. So like that'll be super interesting to see how that plays out.
Yeah, if you're number one, you want to protect your position. You're king of the hill, so you build a wall. And if you're number two and you've been trying to catch number one for 30 years and frustratingly you've never gotten close, this is your opportunity to lean in and finally catch up to them. So it is interesting it's going to be very fascinating the next 3 or 4 years to see which of those decisions, right?
I had this when I posted an article on this. I'm sorry for forgetting who commented this on LinkedIn, but they said, well, Walmart has just been behind the 8 ball for so long. They missed the boat on marketplaces. They missed the boat on ads. Why is this time any different? What do you think? What do you think? Do you think that are they always destined to be playing catch up? Could they win if they approach things differently?
Depends on your definition of winning. It would be, so there's like two parts to both business. There's grocery. So Amazon's clearly losing to Walmart in grocery. So Walmart owns the high ground in grocery, which is actually a good place to be because it's such a frequent purchase and a share of wallet. So that's actually, so they've kind of won on that part of the scorecard. But where Amazon's really assaulting them is everyday essentials. So they're probably getting to equal on some of that stuff. And then Amazon just has totally trounced them on the other segments like apparel, sporting goods, the rest of the store. So they need to use this as a way to come back on, both defense and protect grocery, I would say. And then I would say, then defense on everyday essentials. And then I would lean in on offense on those other categories if I were Walmart and use this as a way to get out there. Yeah. So it is, I've had people say, so at some point this will go from agents scraping websites to agents talking to agents. And what if you built your basket up at the Gen AI and then the agent on your behalf went and had like a little auction for the basket and it said, all right, Kiri's about to spend $200 on back to school groceries. And, one agent says, well, I can fulfill that basket on this date for this price. And, but I want to show Kiri 3 ads. And, so I think that could be a way that Retail Media Network gets back in here. Like the ad could be part of the negotiation, right? Because to make the margin of that basket or maybe the agent says, I will only accept things in the 170 range for this basket. Maybe the retail responds almost like an RFP and says, I can do 170, but I'm going to need to see some ads and I want to verify she's in my loyalty program and I want her email. So I think there could be some really interesting things. And then you as a consumer, the agent will come back to you and say, good news, Kiri, I've gotten you 170 on this, but you need to share your email and see 3 ads. Do you agree? And you're like,
yep.
For $10, heck yeah.
$10.
Yeah. Or maybe you're in part of the world where you're like, no, I'd rather pay the 180 and get it without all that hassle of all that kind of stuff. Yeah. So it's going to be, I don't know if that's like a bit out there. But I think there could be a world where that's what it looks like. So I think Walmart has a good shot here. They thought for a long time they were behind on infrastructure, right? They had 8 fulfillment centers, and when Amazon had 125, that was not good. They've caught up, so they can fulfill things. The fulfillment Walmart Plus is good. I think they've caught up on the infrastructure and then getting in the pole position on Amazon on that. This could be a good time to leapfrog them. So I think they'll make up ground. I don't know if they'll quote unquote win.
Right. Yeah.
Just the fact they're being so aggressive about it. And I've never met Doug McMillon, but I've consumed a ton of his content. And he kind of comes off as like a super nice guy, but you can tell he's aggressive. He wants to win. And, he has the full backing of the Walmart family and the Walton family. And I feel like he's probably been chomping at the bit for a day like this. It was kind of like when this came out and Microsoft jumped all over OpenAI. They were like, finally a chink in the Google armor. We are going to drive a wedge into that. We're going to drive the biggest sword into that chink we can buy. And that I think that same thing is probably going to play out with Walmart and Amazon. And it's going to be fun to watch.
Yeah, he's been waiting his whole career for this moment. Yeah. Yeah, so I think and then just like putting a bow on this, like for the retailers. So yeah, don't gate the agents. I think that like this reframe kind of like what Walmart's doing. The agents are your number one customer. If you can roll out the red carpet to an agent and make your site super crawlable, like, provide these really great endpoints and MCP or whatever technology the agents are really find the most accessible, then you will get you're going to get thousands of customers, right? So I think reframing for these retailers from agents as like the big scary unknown to like, no, this is the ultimate influencer for us. If we can actually get a preferential standing with these agents, we can win a lot of the pointy end of consumers.
Yeah, I think that's right. And it kind of goes back to, I remember when, stores were very reluctant to come online and they would use GSI instead of doing it themselves. And it was a hobby and all this. And Nordstrom leaned in, and it was one of the Nordstrom brothers. They said, we need to be where the customer is. And if they're online, we need to be there. And I think it's the same thing. If the customer is using this new way of doing things, you need to be there. You can't, if you feel like you can hide in a fortress and the customer is going to jump over that wall to get to you, history has shown that does not work out very well for you. So I think it's if you really are customer centric and your customers choosing this, you need to roll out the red carpet. Is the where I kind of land on the same. I think the Walmart strategy is the winning one, but I totally understand the Amazon one where they built all this and don't want to lose it. I think they'll do it until it doesn't cost anything to try it for a while, and then if it starts to be a material problem, you can always take it down. Whereas it's harder to build a wall after the horses have been out. So
that's true. That is true. Yeah, that's that Amazon concept, right? The irreversible door, or
the one-way, two-way door.
Yeah. So I think if on the brand side, it's brands are just going to chase whatever surface people are spending time on. So once there's ads available in these LLMs, they'll migrate some portion of their spend over there as quick as they can. But there's a lot of discussion with brands about getting their product content accurate and visible in LLMs, and that's a big. I don't know any brand that isn't investing in that area right now. Like, how can we be discovered in these LLMs? But this, I think, on the point of, for retailers, don't gate the agents. This is an area that brands should be trying to push their retail partners on as well, because what's good for the brand is good for the retailer, and vice versa in that way.
So to recap, loyalty programs, focus on some differentiators like fulfillment speed, ease of returns, that type of thing. Theologically, they're going to have to decide, are you gating or welcoming the agents? That's an interesting philosophy. And trade dollars are surprisingly immune from this. So it's just kind of a funny conclusion, but I guess it's a good one. Yeah. Buy more end caps.
What's old is new again.
Yeah. Kiri, thanks. I want to stay. You were very generous with your time, and I appreciate it. I want to stay within that. Thanks for helping us understand kind of like retail media network landscape and some of your thoughts on how this is going to impact. And we'll have to have you back on as we have some big news items that come up to help us navigate this. If folks want to learn more about the retail media side, how do they find Retail Media Breakfast Club?
Yeah, you can head to retailmediabreakfastclub.com. The main ways that people consume that content is as a podcast. You can find Retail Media Breakfast Club on your favorite podcast app. There's an email newsletter you can sign up for on the website. And then also you can follow on LinkedIn. I do a newsletter over there as well. If you're a LinkedIn junkie, you can find it over there too.
What's the most popular way people consume your
LinkedIn?
Content?
Yeah,
absolutely. And then what's fun about it is you always keep it super tight. Is it like 15 minutes, or does it kind of wander kind of to 20 sometimes?
Try and stick to 10, which is a bit of a challenge. Yeah.
10. Okay. Yeah.
But that's my USP as well. Like there's a lot of not everyone has 20, 30 minutes to listen or read. So yeah.
Yeah, it's nice. I have a very short drive into work, so it's a perfect perfect for my short commute. So part of my daily routine, which is nice. Thanks for coming on, and thanks for sharing your insights.
Thank you for having me. Appreciate it.
Follow, rate, and share to stay up to date with Retailgentic, your guide to the future of AI shopping agents.